Are you looking to build long-term wealth? If so, have you considered investing in real estate? Real estate is one of the most powerful ways to build wealth, generate passive income, and meet your financial goals. And unlike other investments, real estate allows you to generate cash flow, appreciation of a large asset, and tax benefits. So I'm going to go over several ways you can invest in real estate. And the first one is investing in rental property. What that involves is putting down typically a 15% or greater down payment. And if you're thinking to yourself, well, where am I going to get that money? Most people that are going to invest in real estate already own a home. So let me take one step back. If you don't own a home at all, you can still get the home appreciation and the tax benefits associated with home ownership by buying your first home, and we can then convert that one to a rental property later. Or when you sell it, I can take that appreciation, buy a bigger house, and then maybe even buy a rental property as well. If you already own a home and are thinking, where do I get the funds? We can get the funds right from your existing asset. We can do home equity loans to get enough money for the down payment and double your asset size. Let me show you some information on rental properties right now. So this is a recent article by Realtor.com and just talks about how quickly rents rose in the last 12 years, basically by 20%, with the average hitting over $1,800 a month in March. So what that means to you is you buy a property, you rent it out. What we're looking for is a small positive cash flow, because in a moment I'm going to show you the appreciation slides. And when you see those, you'll see that's the reason people buy the long-term investments, is for that appreciation. This is a chart for Texas, all transaction house prices going back to 1975 all the way till now. And if you look, prices were under, in 75 at $60,000, and now in Texas, you're looking at over $500,000. And the last 30 years in Texas, the appreciation was 11% annually. Now, we're making this video, we're at the very end of April 2023. We're not going to get 11% this year because we've had a little bit of a slowdown. We'll probably get about 4%. But over the next decade, we'll probably get another 11% roughly. And the thing about it is, whether you're an existing home buyer or a first-time home buyer, that appreciation means the asset goes up in value by that percent. So for example, a $500,000 house at 10% would go to $550,000, and the next year it would go up by $55,000, and it compounds. And why that's so important is because the money you can put down in real estate, you can put as little as 3% down the first time you buy your house, and yet that big asset's appreciating at that rate. So that's what creates wealth rapidly through appreciation. Another way to invest in real estate is to buy and flip homes. That's where if you have the capital, you can buy a house, you can fix it up, and you can sell it for a profit. And another category of investing, so we have residential, you can rent, you can flip, or you can invest in what's called real estate trust. And these are almost like a mutual fund for real estate. They're not a mutual fund, but just to give you a simple example, that invest in real estate. And if you look at this time period right here, over the last 40 years, 30 years, 9%, 25 years, 7%, 20 years, 9.2%. So you're looking from 10 to 30 years, so you keep it a decade. These are really good rates of return on your investment. And then lastly, I want to talk about tax advantages. So when you do own real estate or invest in real estate, there's different ways to set up the tax advantages. But I just want to show you an easy resource, and also point out you want to connect with a great tax preparer. I know some. If you need help, I can introduce you to actually get tax advice. But you can definitely self-educate yourself by going to the IRS. There's just article after article on tax tips to read on how it works, from all the way from selling, sale of a residence to, rental income and expenses. And one of the things that it's just super, like a real big deal for why everyone should at least own one house as an owner-occupied property, is that it's capital gains free up to $500,000 to $1 million, depending if you're married or not, on the resale if you own it at least 2 years. And with capital gains, for those of you who don't know, it's when an asset appreciates, you have to pay tax on that appreciation. Residential real estate that's owner occupied has certain exemptions that when you sell it, that money's non-taxable. And that's part of financial planning that's so key. Financial planning involves not just real estate, how you manage your assets, but also your tax planning strategy. And that's what makes real estate so attractive. So hope you found some value in this video. Reach out to me if you'd like to discuss building your real estate portfolio. It's what I do as a certified mortgage planner and liability specialist. And watch next week as we continue on the series of building wealth through real estate and other avenues of how to build wealth. Thanks so much, and I hope you have a great day.